Hi, my name's Zach Doran. I'm with the Ohio Auto Dealers Association, and today I have Joe Cannon, the Vice President of Government Relations for OADA, with me, and we're going to talk a little bit about the state budget that was recently finalized.
Thanks, Zach. Every 2 years, the governor and the legislature is required to pass a state budget which funds state operations for the next 2 fiscal years. Because of our large economic impact, particularly in view of the taxes we pay and the taxes we collect, it's inevitable that we find ourselves in the mix during the state budget debate, and this year certainly was no different. Before I quickly delve into that, though, I did want to take us back just a bit and express acknowledgement for the governor and legislative leaders for the last budget passed back in 2011. Dealers will recall that the state was facing an $8 billion budget deficit, which is a big number, and we're very pleased that they filled that budget hole and passed a balanced budget without increasing taxes or fees. Zach, as you know, this time around, the landscape was a little different. The state is actually operating with a surplus, but the difference this time around is that the governor was very focused on a couple of his priorities. One was reducing the personal income tax, and two, providing some tax relief to Ohio businesses, both of which, as you know, we're very supportive of. Challenge under his plan, though, was that he was going to pay for a lot of that through an expansion of the sales tax base onto services that are currently not taxed. And when we got the information, we shared that with our key CFOs and our friends at Schneider Downs, our endorsed accounting firm, and try to get an understanding of the impact that would have on dealers. As you know, when we went through that, dealers are heavy users of a number of the services that the governor wanted to tax. Just to name a few of them would be advertising, commercial rent, accounting and legal fees, dealer reserve, dealer holdback, and a host of others.
It was about a $200,000 additional penalty for each store on average, if I recall correctly.
Correct. When we weighed the pros and the cons, we as an industry were a net loser, upwards of $100 million across the industry, and as you said, individually, it was well into 6 digits that the dealers were facing in terms of increased tax liability.
Overwhelmingly, the largest victory within this state budget was the removal of the sales tax expansion to services.
That's correct, Zach. As we discussed earlier, that proposal, as written, would have increased our tax liability by over $100 million under the original proposal. And in the final product, we actually go to a net winner under the proposal.
Along those lines, let's begin talking about the pros and cons of this budget.
Sure. First of all, in response to the challenge we were facing, as you know, we organized the dealers around the state, had meetings with some of the key legislators in an effort to shape this in a way that we would minimize the impact on dealers. And we're very pleased at the end of the day we were able to alter this in a positive way for dealers. And as you mentioned, there are a number of pros. First of all, there is a decrease in the personal income tax rates, a 10% decrease over a 3-year phase-in period. Secondly, the other big issue is a 50% tax cut for pass-through entities on the first $250,000 in their business net income.
Previously, there was no deduction.
Correct, and that'll be off of the new income tax rates as well, which is a bonus. So the other thing to understand in this process is, while we're going to talk about the things that did happen, very important to talk about the things that didn't happen either. And those would include no increase in the CAT rate. It still remains at 0.26%. The sales tax on the money difference, the consumer trade-in credit on new motor vehicle purchases, that's still retained. And the vendor discount, which is the portion of the tax that dealers retain for collecting it on behalf of the state, is still in place and still helpful to our bottom line.
All in all, really a lot of positive things have come out of this budget. There are a couple negatives, however.
There are. Again, we'll go back to the philosophy of providing tax cuts. Many times you have to be able to pay for that. And what policymakers did here at the State House to generate revenue was to increase the state portion of the state sales tax from 5.5% to 5.75%, and that'll be effective in September of this year. In addition, they altered the CAT exclusion on the first million in gross receipts. Currently, the first million is exempt, albeit you do pay a $150 administrative fee. In the future, beginning in 2014, there'll be a tiered approach. And basically for our industry, Zach, if you're over a certain amount of gross receipts, you're going to pay that full percentage on the first million in gross receipts.
For the vast majority of our members, that number is going to be $2,600 total, including the $150 initial payment, if I'm not mistaken.
Right. Actually, it'll be $2,600 on the first million in sales, but there won't be a $150 administrative fee anymore. So
Okay.
a total difference of $2,450.
Perfect. At the end of the day, it seems like our members really went from a big net loser here to a winner.
It's correct. And the reason for that, again, is our efforts to interact on behalf of the dealers with members of the General Assembly, but really the dealers too, in contacting their legislators and so forth.
At OADA, we have a political action committee called DIG, and certainly that played a role, as it always does, in shaping legislation. And Joe, you want to talk a little bit about DIG?
Sure. Our legislative program really consists of two key components. One is our grassroots efforts that we talked about, and I would encourage all dealers, if you haven't so far, to develop relationships with your legislators, and we'll be happy to help facilitate those relationships and meetings with legislators. The second part, as Zach mentioned, is our political action committee, the Dealers Investment Group, which is funded by personal contributions from dealers and their employees around the state. And it's a fund that we use to support legislators who have demonstrated fairness on issues impacting our industry. And what it does is really give us a seat at the table in the process to come in and state our case on important issues like tax reform and others.
Okay. I appreciate you being here with me today. If you have any questions about the state budget or the legislative program at OADA, feel free to reach out to either of us. Our contact information will be at the end of this video, and we'll talk to you soon. Thanks.